guys, and glad to have you on board again today. Yesterday actually turned out to be an invalidation day, even though it started pretty well, but this is one of those days in which actually the market still remains the leader and you have to follow accordingly. So I had quite some confidence early in the morning, figuring out that we would probably reach out to validation level, and we actually got close to it, triggered some bullish signals, and obviously the market paid them almost instantly. That's incredible, but I mean, that's the world we live in right now. I cannot understand that. I cannot trade against my personal convictions, which still remains fairly neutral at the moment. I don't want to be heavily buying this market. I fear too much danger into this market down the corner by some really stupid low risk perception, though this is going to be today's topic once again. Pretty much same thing as yesterday. We're dealing with reversal context, so in any way beginners cannot nearly touch the current price and just definitely have to wait for experienced traders to catch up some valid reversal patterns, and afterwards trying to catch the reversal third range boundary that may come later on. So patience still heavily required for less experienced traders. Experienced traders still at work. We know how difficult that is to reverse stock markets, and specifically US stock markets. For 2 years they definitely don't want final excesses to show up, so anytime they show up they turn it into excessive market and then whatever. So we're in this game again, just like last fucking year. We're chasing the bears. I'm looking at the social medias. It's just incredible how stupid this game turned out to be. Right now, it's more like bulls want to fuck bears. They don't even think about reality. They just say, all right, whatever, tomorrow we're gonna fuck some more bears. That's great, but what about valuation, guys? Maybe you should think about it for a second. So we don't care about valuation because, of course, this time it's different. It's not going to be like the previous bubbles. Those guys who are comparing this market with the 2000 bubble, they're definitely stupid. They don't understand what the market is. I think I understand the market just a little bit more than they do, and actually we're right into a bubble. It's just, of course, bubbles can last longer than you can be solvent if you're just stupid enough to sell and hold. So you don't sell and hold, okay? You specifically don't sell right now, and I really stand on this. If you're net selling the market at the moment, you're totally stupid. The best thing you can do right now is to cover up portfolios, which means you should be bullish and covering the bullish portfolios with some selling entries. We've always been clear with that. The experienced traders among the community who do sell just like I do must have bullish entries on top of them, and you never sell for more than what you bought. That's absolutely necessary. No net bearish exposition at the moment until we manage to get a validated reverse, and then we'll eventually consider reinforcing positions and getting net bearish, but at the moment certainly not the case. Anyway, yesterday I had a perfecto trade, which means I got stopped out without losses. That's one of the things that happens, and I'm pretty fine with that. When I'm wrong without losses, that just means I'll be right sooner or later. So today is another day, a higher price area, specifically the same as that we seen yesterday. So we're now dealing with the futures gap in which we're into. So it's a gap that sits between 32.12 on the futures contracts up to 32.27, something like that. We're dealing into this area as we speak. So we'll see how long it lasts. We'll see if that's a reverse pattern once again. We'll follow the same guidelines as yesterday, pure and simply. Let's go to the context analysis. All right, so today is about ADP. That's the only catalyst we can actually talk about, despite the fact that gold is making new historical highs. And quick side note in here, I'm selling all the gold I have, all the physical gold. I'm getting totally out of gold because these are my long-term targets. I was targeting approximately $2,100 as a maximum target for gold. Regarding the current momentum, we might be there within the next 48 hours. The problem is this is physical gold, which means means there is some induced delays when you want to sell. This is not an immediate selling contract like what you could do with paper gold. So regarding this, I'm taking care of this just right by today, actually. So I'm going to start focusing on getting the fuck out of gold. Profit taking, once again. Things can go higher. I don't nearly give a shit. It's just that at that point I had a plan. My plan has reached out its target. I'm not targeting any more gains. Some people tend to do it right now because they tend to forget about actual valuations. People don't nearly give a shit about how much things cost or how much things actually worth. People are just thinking about how much can people pay for this shit, which is dangerous bubble territory type of trading, because the trading is not all about price. Trading is about price and value distribution, which is certainly not what we're doing right now. We're just flushing value away because there's so much money printed that actually we're dancing on bills, and therefore prices must surge. Well, we'll see about that. I doubt this is going to last much longer. Anyway, that's my personal vision. I totally understand those who have a bullish stance in the market right now. It's just I think it's totally dangerous to go really long bullish right now. It's more about you can get in, get out on an intraday basis and kind of trend follow as long as the game keeps on playing. But just like I said yesterday, I think the ticking bomb is the game we're playing right now. We're just basically taking the bomb, taking it and holding it for just a few hours, taking heavy amounts of risk and just, oh, okay, shifting it to the next player, because of course the longer you hold the bomb, the bigger the danger is for it to blow on your mind. So that's what we live in. Second thing, and really important, I think that is where the devil's hidden. Fear and greed index. Remember that the prices we're dealing with right now are the equivalent of the ones we had earlier this year, right before the coronavirus showed up. So last time we did that, we were trading over 90 on the fear and greed index, which is multiple asset, derivative assets and risk-related correlated asset measurements. So fear and greed index is now far lower than it was previously in the coronavirus. So that still stands to confirm what I said. Either there is a huge divergence in the perception of risk and the reality of risk, and in that perspective, price may rapidly fall back to the actual risk levels, which is probably 15% lower, between 10 to 15, that's what we said on the weekly plan, so still at play, or the sentiment still has a lot of room to improve, and in that perspective, we'll probably go historical highs, 6%, and in that perspective, I suspect the sentiment to severely rise closer to 80 and probably above this after reversing, obviously, because we're definitely not going to send ourselves into the stupidly high levels of greed that we've seen prior to the coronavirus. We'll never get there again. This was absolutely staggering, stupidly levels of risk perception. Regarding the session yesterday, it has been pretty well all day long until we actually got to getting closer to support. That's the moment we were falling right here, and that was great. At that point I felt like, all right, we're definitely gonna get to validation levels, we're just 1 inch away from them, and bam, motherfuckers, these bullish signals showed up. I actually shared those signals in the Discord because, I mean, I might have a bearish sentiment right now, and I'm looking only at bearish cover trades, no net bearish exposition. Really important for you to understand that. And actually, I mean, this signal just worked immediately. V-shaped reverse, and the market decided to close at the high. So definitely the bulls are there, and they want to buy whatever the fuck is circulating out there. Very dangerous. I totally disagree with this market behavior, but that doesn't mean I make the market. So I made apparently the wrong decision, because my scenario was getting closer to validation and actually never triggered, as the bull scenario just went all nice. They reached out to validation almost immediately, and then the market didn't even pull back afterwards. So it has been a straight line stairway to heaven for them. So I understand how easy that is for the bulls right now and how complicated that is for the bears. But once again, the battle can be assessed once the war is over. So I don't give a shit about the short-term battles. The bulls may be winning. I'm playing on a much larger scale. I'm taking about 1 hour to 4 hour chart scale in here. And for now, even though it's painful to get in, get out, get in, get out, get in, get out, that's the plan. Sooner or later, I get be right. And when I'll get right, I'll take the gains I deserve, because that's how it is. It's just how much risk you take for this gain. I think right now I'm taking a decent amount of risk, just shorting the areas in which danger is down the corner. And if we overcome all my areas, I'll simply get the fuck out. As simple as that. So, of course, Nikkei and derivative contracts show the same thing. We're not breaking resistances. We're just invalidating the directions. We've said it a few days ago. We're trying to break resistances right now, but certainly not doing it. We're not breaking support on the VIX either. Okay, and look at the 30-year bonds. We're not breaking resistances either. So, still the same old game. I see the bulls definitely wanting to set the motion to the upside, but I don't see anything confirming such a thing at that point today. We've got the ADP numbers, so it is a swing day potentially today. If the numbers were disappointing the market, we could have a serious reverse. And in that perspective, if we just pull back to the supports that have been paid yesterday, it's definitely a short selling signal on the swing timeframes that will trigger. So it is a simple game, actually, in terms of context right now. As long as we move up and we make higher low points, everything's fine. If we ever retrace to a bullish entry point, everyone will get the fuck out in the same time. And I suspect the 10 to 15% move to actually trigger in probably just a 3-day session. So it can be huge burst of volatility because everyone will do the same thing in the same time. And from time frames reaching from 15 minutes to eventually even shorter time frame, going all the way up to daily charts. So all of these guys are going to do the same thing in the same time. And when multiple time frames are doing the same action, that means very, very less available liquidity, probably a shit ton of volatility to expect. But for now, it's still speculative. So I hope you do understand that thing. I don't know the future. I'm just managing my way through it. The dollar is still losing ground. That's the motion for now and keeps on playing. So we'll see how long it lasts. But I personally think that a range is more appropriate in the nearby area, closer to the 1.18. And as long as we stay there, I suspect some up and down moves, whatever, some arbitrage for a few days, eventually a few weeks after we probably will reinstate the bearish trend on the dollar. But that's a topic for another day. All right, let's get to the chart. All right, in terms of correlation lecture, still the same thing is at play, decorrelation, and we can see that the pattern is willing for reverse, which means the late laggers are catching up on prices, and you can definitely see this by the fact that the French index is breaking a resistance, DAX is doing as well, Hang Seng is doing it as well, Nikkei is looking forward to it. The thing is that normally in this perspective, we should see the leaders consolidating, which we don't, because obviously as long as everyone is making one pip to the upside, the GAFAMs needs to be doing it as well. So we're still living in the same game in which they're losing the momentum. The big guys are definitely losing momentum. I see a lot of volumes over the previous 48 hours on Apple and Microsoft, which is very dangerous. When volume shows up in a bubble, definitely shows a red flag, but too early to tell. I'm looking for supportive area right now. As long as we, same thing, keep on rising, let it happen, okay? It's just that whenever this thing reverses, it is going to be everyone in the same boat, okay? But for now, we're rising. The triple top is being overwhelmed in terms of NASDAQ. We'll see how long it lasts. New historical high, resistance broken for the Russell 2000. Same thing goes for the S&P 500, who is grinding its way up. And we're looking for resistances in terms of Dow Jones. So we'll see how long these things can last. Normally we should see the recorrelation phase defavoring these guys and favoring these. So we should see kind of a consolidation with a huge catch up on the late guys, but consolidation on the leaders. That's what I'm looking for. For now, we still have nothing like that. So I'm waiting for this to be confirmed today. And therefore, I'm looking for reverse trade, but not nowhere, all right? We always deal with prices in an area. So the first area is the one I sold earlier today, 32.12. Actually didn't manage to trigger a signal. I got really low on this one, just one contract, and I spare a second contract for 32.28. And I'll see if both of those areas are just passed on a straight line. I'll just take a loss by the end of the day. That's what happens. I'm taking risks. And if I end up being in the wrong direction, I'll take the associated loss. That's just inevitable. That's how it is. But I'm also anticipating signal, which means I'm taking high level of risk. I'm definitely taking a loss if I'm wrong, okay? Though I'm looking forward for this day, we're definitely getting into profit-taking area. That's the signal I told you about yesterday, got bought almost instantly by the market. and broke the resistance right after. So we're pushing and pushing and pushing and pushing and pushing. But at that point, any reversal is going to be a termination for this structure. So you can definitely draw the trend line. As long as we stay on top of this, everything's fine. If we ever get to the trend channel in here, or I would say in that perspective, just get into the lower 50% of the trend channel, and we're 15-minute, which means getting in the 50 lower percents of the 3-minute context. Just doing this, I think, is going to sign a bearish signal and bearish reverse. We're into very, very dangerous territories out there. So it's just, as long as it goes up, everything's fine. If it retraces, end of the party, and that would suddenly be quite a violent reverse. As long as we're dealing here, just look at the VIX. The VIX isn't going to the downside. Remember that this is future VIX. The real VIX is trading from 8:30 a.m. in US time frame. Sorry about that. So yeah, as long as it goes, let it go. But I suspect quite some volatility show up. And if it doesn't, then I'll be wrong. If the volatility doesn't show up in the nearby area, I'm definitely wrong. The 1 hour chart is still the reference time frame out there. We're trading on top of the resistant context with the trend channel. That was the plan for the experienced trader yesterday. We tried in here. We decided to stop loss trigger yesterday evening and to actually get to trade this area today, the trend channel area. So we're right into the expected area, just waiting for prices to react. And if they don't, as I anticipated the signal, pure and simply, I anticipate the signal because I have to go bringing my big boy to the nanny. So that's the thing. I know I'm not there for the for the European Open, therefore I anticipate the signal. I wasn't expecting to see the market surge like hell, but actually shit happened. I mean, I just took one signal. I'm losing like something like $25 or something. So it's really negligible. Okay, so the party will be set later on today. We'll see all about it. As for now, we're surging to the upside. Let it happen for as long as it happens. My next tradable area where we once again have breakout, which is totally confirming the end of those trending patterns. We'll see. If the patterns terminate out there, I'll be fine. If the pattern doesn't, then I'll be wrong. And if the pattern keeps playing and close at the high today and cross over the entire bearish area, then that's life. I'm out of the game, and that will be part of the play. Okay, though I'm selling today, I think the bulls seriously should think about partial profit taking in the nearby area. Partial profit taking if you want to keep riding, not knowing where you're going and letting yourself riding that wave. I totally would understand that, but be aware that for trend, this thing is over. So the only thing you can expect now to make further gain is to switch from trend to from trend to excessive market. So you really want the market to go excessive right now if you want to pile up some additional gains. Rationality, just leave us out there for very big time frames. The daily trend is now over, 4-hour trend as well. So all of those things is just, we need to turn to excessive market if you want to keep on going, which can happen. And history told us that regarding the latest 2 years, when it comes to going excessive to the upside, we're definitely good at doing it. Anyway, let's switch to the conclusion. We've got more than enough elements at the current given time. Well, the conclusion went just fine this time. Cool. So let me sum up the core informations today, okay? Reversal trade experienced only, meaning the beginners still have to be very patient and wait for the experienced trader to give us the white flag, signaling the fact that they can actually safely trade. Until then, there is not even a possibility that you can do this. Eventually today we can switch to some shorter time frame because we're further away into the resistance. Therefore, I understand that a little bit more aggressive entries can be considered, which means yesterday was all about 1 hour, 15-minute chart looking at. I think today, as we're dealing with the 15-minute chart context, and that this one is fairly rapidly and it's closer to going vertical on the trend channel on the context 15 minutes. So I think we can eventually switch to 3 minutes a day. So we need a 15-minute signal, okay? It has to trigger a 1 hour signal afterwards. But I think if you really are If you're totally new with the strategy, just wait for 15 minutes at least. If you're a little bit more experienced, like a green guy into Discord, I think you can eventually try a third range boundary, but on the 3-minute short time frame. Of course, make sure that you lower the leverage accordingly to the higher level of risk you take, but I suspect that this is going to reverse violently, and therefore going to the 3-minute is possibly going to save your ass out there. So look for this, apply the strategy rules, don't play God, really wait for the third range boundary to show up, at least 3-minute short time frame, don't go anywhere below that. So 3-minute, 15-minute, totally okay, and has to trigger a 1-hour reversal signal afterwards, so we can keep that up all for the rest of the week and eventually the next following weeks and stuff like that. Remember that what we're dealing in here is a 4-hour reverse, so the goal is really to pile up the bearish signals to lead them right up to the 4-hour chart time frame, which will be the total validation of the reverse. So far, it's still a long shot, and it's a very difficult game for experienced traders as well, but we're used to it. We know how reverse can be complicated, especially into the US stock market bubble right now. All right, that being said, don't forget the ADP number. Really be cautious today. We're dealing with the latest area. We're closing, as we speak, the gap we created with the coronavirus, okay? That's the reality we live in, okay? The sentiment is far lower than it was the last time we dealt with those areas, which means there is a problem with risk management, but that doesn't mean this is a reverse, okay? That means it definitely says that reverse is probable, very likely, both from the context and the technicals, but the technicals right now are triggering early signals and they fail to validate, okay? So that's the reality we live in. Don't try to impose your reality to the market. Think, follow your plan, and don't be stupid. All right, that's going to be it for today. See you tomorrow, guys.